Yes, yeah. Well, at the moment, I am busy focused on the impact of iOS 14 and what that's going to mean for advertisers.
Yep.
I.e., it's going to be really big, and I don't think anybody actually really realises quite how much it's going to hit them. At the moment, everybody's talking about the impact on Facebook ads and not really talking about the impact on Google ads. So that's my current thing, is making people realise that it's going to affect Google ads as well.
Yeah.
But yeah, so that's it in a nutshell. Really, still the same Google ads, Facebook ads, marketing thing.
Nice. And so ultimately, with iOS 14, do you think that the net effect for small business owners doing, Facebook ads, Google ads, is just an increased CPL and CPA across the board?
Not really, no, because the tracking can be hugely impacted. So whereas it's fine if you're running Google search and you have quite a short conversion pathway. So if you typically get most of your people convert within a single session, because that's all you're going to be able to track is a single session, what they do actually on that visit. But if you have a longer pathway and you rely on retargeting, then that's where you're going to be losing the data, because you can't track people multiple times. You can't track impressions. So if they're seeing your YouTube ads or your display ads but not actually clicking anything, you can't see that. So there's going to be quite a lot of lost data. There's going to be loads of lost targeting, image, gender, like all the likes and interests and all those types of things that we're used to targeting. By loads of those, it looks likely they're going to be going as well.
But surely that'll push up your CPL costs.
Some advertisers might leave, so who knows really. Some people might once they lose these targeted options, but it may well push up cost per lead. But I think the real thing really is going to be that people need to be tracking via other means as well, so via their CRM. So whether that's HubSpot, I've recently become a HubSpot partner.
Oh, have you?
I mean, HubSpot will allow you to keep the functionality so you can track people right from when they've signed up, all the way through all the pages and emails they've opened, etc. That's one way around it. But costs are likely to go up, or we're going to see really. So it's going to be interesting to watch.
Nice. And what did HubSpot do to convince you to move from Infusion?
Well, it's the landing pages, really, having it all in one place, no longer needing to rely on ClickFunnels all the time. So, and being able to visit somebody's record in HubSpot and being able to see every page they visited, every email they opened, being able to see what, being able to schedule meetings straight within it, I can track all my normal emails. So if people open their email via Gmail, I can see. It's quite spooky, really, how much you can track. But I can see why they're doing things about it.
Yeah.
Big guys.
Oh, awesome. Oh, yeah. Well, thanks for being here. Do you have any questions at all that I can help with?
Well, apart from being really brand new to Clubhouses and just joined a couple of days ago, so I don't really know what I'm doing. Any tips for me to help me find my way?
I have no idea. I'm literally just I'm just holding these daily wealth chats to see. I mean, this in itself is me split testing different forms of marketing. I've always done paid ads, and always ignored the organic stuff. It's, I guess, because I had to buy a crappy iPhone to get onto this because I'm an Android fan.
Oh wow!
And so this is I bought this phone for like 200 quid, and so my first goal was, right, let's see if I can get just one new WAP student, and that'll break even. And it's interesting.
Okay.
So I've been doing these daily chats for about 2 weeks, and I think in the last 2 weeks we've had 35 new WAP trialers, which has been directly from this, which is cool, and with a 50% conversion rate. So literally 50% of our WAP trialers become full WAPers. So we've got the cost back of the phone and more. So can't complain. And shameless.
That is great news. Wow. So for you, it's been consistency is the key every day. Is that right?
I guess so. I know I'm not really gaming the Clubhouse algorithm properly, because I've been chatting with some Clubhouse people who really know their shit. And it's all about getting shitloads of speakers in a group, because then everyone sees. Because then you have the list of every speaker going, oh, the person I'm following is speaking. Let's tune in, and then you can very quickly get hundreds in a group. Like, I'm part of a M&A group that we do every Friday at 11 o'clock, and we always get like 100 people in that group. But there's like six main speakers in there, so no shit.
Okay, that makes. Yeah, that's really useful. Yeah, thanks, Sam.
But I'm just small fry. I mean, like with these daily chats, I'm probably on Clubhouse. There's only, I don't know, 10, 20 of us normally, and then I'm doing Facebook Live at the same time. So hey, everyone on Facebook, and there's normally about 20 or 30 there.
I love it.
Yeah, I'm a bit anal about losing content. So obviously this is being recorded on Facebook Live, and then what I do is I put the recording of the Facebook Live onto my YouTube channel in a playlist. So yeah, for those of you who want to catch up on previous chats, it's all on my YouTube for free. Check it out. Every day there's like 40 minutes worth of stuff. So that's just I don't know how long I'm going to do these daily chats, but at the moment I'm having fun. As soon as I stop having fun, then I'll stop. So, but okay, so I've promised to answer a few questions because we had a bunch of questions pop up at the M&A chat this morning, which there wasn't any time to answer. So I'm going to go straight into that. So, Aaron still, yes. So these are Aaron Hardingham's questions. So he's a fellow Norwich folk. All the smart people who live in Norwich. So he's got a few questions here. So I'm going to try and bash through these questions because I have actually answered, I think, all of these questions in previous M&A ones, but it's cool. So he said, just one more. For a complete noob, what would your first suggestion be to look for potential buys? So for context, Aaron is a really talented tattoo artist. So he has a tattoo studio in Norwich. And not just that, he's really good at training other tattooists. However, we're playing Age of Empires a lot, like every day. And so I've been getting to know his business a bit more whilst playing, which has been quite fun. And so he says it takes a long time to teach up a new tattoo artist. I don't know what the correct term is. I'll just call it tattooist. And I was saying that for him to grow, or he said that most sort of tattoo artists are very in the business. You know, they're doing the do. They don't really grow the business. They remain as one-man bands, etc. And that in the UK, I don't think that there is like a proper national sort of tattoo studio chain, and that he could very easily be that chain. So he needs to set up a store in at least 20 cities. So with M&A, 20 cities is a really good benchmark to aim for, because when you have outlets in 20 of the main cities, all of a sudden you have a distribution network, even if it's a very small sort of branch. Even if it's like one tattooist in every of the 20 main cities, it doesn't matter. You now have a distribution network, so your exit multiple, if you were to ever sell your business, goes straight up. Because if you're a one-man band tattooist, like your exit multiple is probably going to be 1 times earnings, if you're lucky. Because the person buying your business is probably just buying your list, and then those customers are probably only, and I guess but if you have 20, that's a good thing to do. So Aaron's looking to get into sort of potentially exploring this, which I think it would be wise for him to do. But obviously his question here, so that's context, his question is, what would your first suggestions be to look for potential buys? So for you, mate, I would literally just get a big map. Every time I've tried to do this, or I've done, different things like this, I just get a massive map. Like, you can see my office, I've got 3 big whiteboards. You can see it, or there's one and there's 2 big ones in front of me. I just get a big map of the UK, or no, I don't. Actually, I just draw a shitty triangle, which is as best as I can draw the UK, and I just put little dots in, and then all I do is I do geo-targeted campaigns. So, for example, let's say we'll go to a random city. Claire, are you still down sort of southwest, like Bristol area?
Yes, Bristol. Yes, indeed.
Perfect. So, yeah, I don't know much about Bristol, but let's say I wanted to open up a tattoo studio in Bristol. Or no, I wanted to buy someone, even better. In fact, that's a good question. We need to actually, I'm going to write this down so I don't forget it. Barrier to entry. So if I wanted to buy an existing studio, I would simply find every tattooist in Bristol, get their address. So you can go on companies. If they're a limited company, you'll find a postal address or something of some sort, or a mailing address. So find their addresses, and failing that, literally go on Google, pick up the phone or the website that they have, and there will be an address. So let's say there's, I don't know, 20 of them. Then you need to just send a letter to all of those 20 people and saying, hey, this is me, I'm like you, fellow tattooist, I want to buy, I'm looking to buy into an existing studio, not necessarily 100%, but I'm looking maybe to get 35% of a company, because I can then come in and do, I can add value with my business systems, yada yada yada. So this is when you need to look at the Nora. Aaron, you could do a Nora with loads of different things. However, the thing I wanted to suggest, looking at the barrier to entry, is that maybe you don't need to buy an existing one, because the barrier to entry is relatively low. But I know you've said this before, if you're just going to set up a new studio, it's going to take time to find qualified tattooists, or if you're going to train them yourself, you said it's going to take a while. So yeah, maybe looking to buy into them. But I would look at the previous M&A chats on my YouTube channel and then do the Nora. We've spoken about this already. And he said, his other question is, how now do I look for potential deals, if there are any, then because the artists inside these businesses tend to be self-employed, how do I try and secure them in the purchase? Without them, it would take a year to train and put new artists in place. Yeah, what would you do? Because a lot of these people would be, the doer, so they probably won't know much about company mechanics and stuff like that. And sometimes, I mean, I've met business, sole trader business owners like this, and the second you mention an LTD or incorporating the business, the eyes go blank and they're scared. But so you have to, like, what I've learned with M&A deals is don't use big fancy words. just talk in, I either try and explain things to, like, either a 5-year-old would understand or an 85-year-old grandma would understand. Same sort of thing. And so you can perhaps say, hey, let's get involved. I'll set up a new company. You have 65% of the company. I'll have 35% of the company. I'll do all the marketing, yada, yada, yada. You do the do. You're still the boss of your studio. But because it's now going to be under this, big brand, etc., you'll have to have our branding, Obsidian branding, I think you're going to call it. And yeah, all that sort of stuff. But without boring everyone on this chat, I'm trying to stay out of the details of, like the contract itself. But yeah, you would basically just be shareholders, with them being the bigger shareholder. So they still have skin in the game. What you don't want is, because if you end up like somehow tricking them or forcing them into a situation where you've got 100% equity in that company, they're just going to get disenchanted and they'll go, oh, screw this, I'll go back to being a sole trader or whatever. So it needs to be a symbiotic relationship with each one. I mean, another thing you could do, but it's a massive ball ache, is you just go down the franchising model, but then it's a long spool up time, because you've got to train up your own people. I don't know. It's a hard one. It's tricky without going into too many specifics. And then the last question, he said, do I start looking around a company's house, looking at tax filings, finding owners, then reaching out through a letter or call? Yeah. So as I mentioned. Now what you could also do, which is what I've done, let's go back to that Bristol thing. If I wanted to buy one in Bristol, I simply just do a finely tuned geo-targeted campaign. So I'd make a 5-minute video, less than 5 minutes, hell, probably even 2 minutes, and the video would be, hey, this is me, Aaron. I'm based in Norwich. I'm a tattoo artist. I'm looking to expand, and this video is going out to everyone in Bristol. And so all I would really like is an introduction to any talented tattoo artists in Bristol, because I'd like to go into business with them and I can help bring leads, blah blah blah. And if you know anyone that is a tattoo artist, please just pop the details in the form below. And if we do business, there's going to be a £1,000 referral fee or something like that. And then you just do send that video as a video view campaign to literally everyone in Bristol. Someone's going to know someone, and hell, you may spend a couple of grand on that campaign, and you may find your deal, or even less. So I've done that before, so that may help. I'm conscious of time, so I'm going to move on from the M&A stuff, because in the Facebook Live we've got a bunch of questions. So Khalid has said, I was wondering if you're planning on doing specifically... Whoa, okay, it's a long question. He wants to know about macro. I'm trying to form a consensus viewpoint on potential life rafts over the next couple of years. Has been listening to a lot of well-respected investors. Blah blah blah. There seems to be a general consensus among them that it's a mixture of crypto, commodities, gold, silver, copper, good quality mining stocks, and then emerging markets play. Would love to know your thoughts, as there's so many competing viewpoints. Yep, everyone has an opinion, obviously. Wow, it's a long question. Okay, so I think there's a couple of questions here. So in terms of a life raft of what may happen, so the existing incumbents, or the incumbents, are failing. So the existing financial system are going to fail. And I think over the next few years, we're going to see massive banks capitulate and fall. Deutsche Bank being the first. I've been creepily stalking Deutsche Bank for years now. Just look at their share price. It's just like a diagonal line from top left to bottom right. And the thing with Deutsche Bank is that they have more derivatives exposure than any bank on the planet. They are the center of the derivatives spiderweb. So when they go bust and need bailing out or nationalized, a bit like Northern Rock, etc., it's going to send a ripple across the whole world. And I think that could be not really a black swan, because there are people like me that are aware of it, so it's not something completely left field. It'll be like a grey swan, which most people are completely unaware of, and that could then topple equities, because equities are so fragile. They're so overextended, it's ridiculous. So for me, I think what will happen is that we'll see a mass exodus into crypto. And along with that, we'll then see the normal shenanigans of governments trying to ban crypto and all that sort of stuff, and creating, general fear, and FUD basically. But I guess, gold and silver, commodities, crypto. You know what? I tend to agree with the Raoul Poles, the Peter Schiffs, etc., and Jim Rickards. However, the thing that Jim Rickards and Peter Schiff are consistently wrong about is crypto. Consistently, I don't think they fully understand it. But yeah, so for me, I have a considerable crypto pot at the moment, and although I am jumping in and out, dancing around it, I think we're moving into a world where you won't have to exit back into pound sterling or whatever, and instead you'll just be exiting back into Bitcoin or whatever. And so I think Bitcoin will be sort of that sort of not a stable coin because it's too volatile, but it will be something where everyone bases their wealth on Bitcoin, not pound sterling or the dollar, because they're just printing all of the main fiat currencies into oblivion. So that's that. The next question he had is, in particular, silver, as I can't get my head around how this would be profitable when you factor in the bullion dealer markup, blah blah blah. So you're correct. If you buy physical gold and silver that is delivered to your doorstep, you are paying for the VAT, so you're 20% down straight away. There is a dealer markup, etc. So long story short, you are down 20 odd percent. So there's no way around that. Yes, you can buy paper gold and silver, and you'll be buying it near spot price, but you don't really own that. It's like buying, crypto on Revolut. You don't own shit. You're buying sort of a fake tracker of gold and silver. And what happens is, whenever there's a force majeure event, where, i.e., what they say, a crazy event which in a liquidity crisis, etc., they'll just force liquidate you. So they'll be like, they'll say, oh, you got 10 grand's worth of paper silver in this tracker, or this bullion vault or whatever. But due to this force majeure event, we're exercising the force majeure clause, and we're just liquidating your positions and giving you cash instead. This happened very recently with GameStop. We had loads of people buying in GameStop, and then all of a sudden Robinhood screwed everyone over and banned all buy orders and only accepted liquidation orders, i.e. sell orders, and they forced liquidated major positions, which is just criminal. It's absolutely criminal. So the old-fashioned rule of if you can't hold it, you don't own it, applies with gold and silver. So I swallowed it. So I've been buying physical bullion since 2009. Well, heavily from 2009 to 2015. Haven't bought any since. I've still got it stashed up. But for me, my bullion, I'm not really looking for an exit until silver's at least $500 an ounce. So, however, having said that, it's a seesaw. It's that good old seesaw again. Do you wait, a number of years for gold and silver to do its thing, or do you sell up now and just put those proceeds into crypto, where crypto is likely to grow faster and a lot higher than gold and silver ever will? It's a seesaw only you yourself can answer. I can't give any advice. I mean, put it this way: my Kryptonian portfolio, as in the specific type of things I do in my portfolio, we started it on the 12th of Jan, and it's now the 19th of Feb, and the £95,000 I put in is now £310,000 ish. And there's loads of coins in there that have gone up 200, 300, 600%. I mean, Binance coin, BNB, has gone up 663% in like a month and a few days. So I've actually just sold some of my my Binance, just not because I want to get out of it. I just think, looking at the chart, in fact I'm opening it right now, it's just massively overextended. When you look at it on the weekly chart, it's just a vertical line up. There's no consolidation. There's nothing. So when I look at that, I think, yeah, this is coming back down. So I've just stepped aside for the moment into a stable coin, and I'll be coming back down. And I've put another buy order in. But it doesn't mean I'm getting out. I'm just trying to get a better entry. So, yeah, it's quite fun because we got in at $38 with Binance. It's now sitting at 305. Funnily enough, I sold my Binance earlier today at 290. And then the market went, Siam exited, everyone go long. And then Binance shot up to 350, and now it's plummeted back down. So we'll see what happens there. Again, it's early days. I mean, Binance is literally just following what Ethereum did in early 2017. Almost word for word, or bar by bar. So that's that. Khalid has also said the long-term emerging markets is particularly interesting as well. Yeah, I agree. Like, for example, Myanmar is pretty much a brand new nation now in its current state, and it's very similar to sort of 1980s China when that really first started opening up. I've always said the moment North Korea starts opening its borders and starts being westernized, and they start letting all the big conglomerates in to basically rape and pillage all of their natural resources and stuff like that. It'll be pretty wise to start buying up land in North Korea. Once, obviously, I mean, it may never happen in our lifetime, but I mean, if I was King Jong-un and I wanted to secure my standing in the world and not lose power and help the whatever, I would literally just open the doors to America and just let Shell, BP come in and start mining all the rare earth minerals and stuff. And that way, it'll bring huge wealth into the country and also the nation. I mean, if you look at North Korea at night, it's the only country on the planet where you don't see lights on. You just see it in the palace, but everywhere is pitch black. It's spooky. And they're sitting on $15 trillion worth of rare earth minerals, which is nuts. Anyway, okay. So does anyone here on Clubhouse have any questions or things that they want to ask or share? Learning points? Because as I said yesterday, we were talking about big mistakes you've made in business, which have led to valuable learning nuggets. So does anyone want to share something? We've got Tom. Hey, mate. I'm clicking the mic. Hopefully, there you go.
Hey, mate. How's it going?
Sup? How's it going? Yeah, all good.
Not too bad, yeah. Sorry, mate. I don't want to bring this up specifically as crypto, but it kind of comes from a crypto place.
Yeah,
my question kind of comes off the back of what you're leaning on there in terms of, have you found out if there is any way of controlling, let's say you've got an old pension from an old employer and putting that into the crypto market, or at least controlling that funds in a way that you're in much better control of the investment?
Yeah, it's tricky these days because when I sort of prematurely left the Air Force, I sacrificed all my sort of pensions, and I ended up with a shitty military pension. And then I had to pay an IFA like 1,500 quid to extract it from the military and put it into a SIP so I could control it. Even though they're like, don't do it. And then and so that's the key thing. Wherever it is right now, you need to get it into a SIP. Again, this is not financial advice. It's just what I did. Get it into a SIP so you can control it, and then you can obviously put it in places you want. Now, unfortunately, the UK is being a bit of a sensitive sissy at the moment, and they've banned all crypto derivatives, or the selling of crypto derivatives, so you can't buy an Ether or Bitcoin tracker at the moment. Luckily, I bought my ETH tracker mid last year. My pension was my SIP only had £8,800 in. middle of last year, and I just put it into this ETH tracker, and it's now sat at 70 grand, which is just ridiculous. However, the UK will open its doors again once, I guess the FCA has got their head around cryptos a bit more, especially with the massive ETF that's being set up in Canada. So, but just give it time. However, there are now companies that are investing in blockchain projects, etc., like Argo Blockchain PLC. So that's an actual company that your SIP can invest in, and that's just gone nuts. So I guess that's just my 2 cents on the whole pension thing. Does that make sense, Meg?
Yeah, I think so. So just to make sure I'm clear, so you're saying right now it doesn't sound like it's immediately possible, but certainly near future we should be able to get back in and yeah, like I say, use your pension to invest in cryptos and whatnot. Yeah.
Yeah. Check out. I don't own any Argo, but just check out Argo Blockchain PLC, and because my SIP is in Hargreaves Lansdowne, and you can invest in that. Yeah. Because you're,
that's been a great help. Cool.
No worries. Marcus Cope, how's it going, mate?
Hi, Sam. Sorry, I'm just feeding the dog. She'll get pissed off now. Never mind. She's just about going in the bowl. Good, cheers, thanks. I do property as well, and in a lot of property circles, they're talking about SaaSes and purchasing. You can purchase cryptos. There's a few that have purchased cryptos into the SaaSes directly, and hold it as an asset. So yeah, it's an interesting thing, isn't it?
Yeah.
My question was actually about businesses. So buying, if you're looking to buy a first business, what should you sort of do? Obviously, I'm healthcare.
Yep.
But it's what size business and what sort of thing would be the easiest as a first level entry thing? I've not signed up for the what yet, but I will do eventually.
yeah, definitely. Because I'm about to put a mergers and acquisitions module in the WAP very soon to have a bit more structured sort of learning journey in that. So, that's a massive question, and I could easily talk for a weekend just on that question. I guess the first thing you need to establish is that if you've never been in business before, you've never run a business, I would highly recommend not getting into mergers and acquisitions. Because what happens is that, there are fads that filter throughout the ages in the self-help world. For one day it's podcasting, next minute it's Clubhouse business model, next day it's drop shipping on Amazon, then it's no money down on property and crypto and
marketing.
There's a million different niches, and now, although I'm sort of jesting a bit and knocking them down a bit, there are valuable niches in all of those industries. You can easily set up a business in every one of those industries, but it's how you do it. It's sort of like that Bananarama thing. It's not what you do, it's how you do it. Yeah. And the thing that I'm seeing a lot with mergers and acquisitions is that there's lots of no money down M&A deals, and you can buy a business for £1 and you're going to be a millionaire in 2 minutes flat. And again,
I see loads of adverts for that at the minute.
It's just the same standard bullshit being respan. And if you've never been in a business owner, you've never run a business, the M&A is a really fast way of losing your money, faster than crypto, honestly. I was an experienced business owner before I got into M&A. I had a good 6 years of business under my belt with loads of mistakes under my belt. And I think the first 5 businesses I bought were absolute train wrecks because I guess I got sucked in a little bit, but I treat everything like a split test, really. So I was like, okay, I'm going down the distressed business route. I'm going to buy a business for £1 and fix it up and whatever. And
do turnarounds.
Yeah, I thought I'm going to be the next Theo Pathetis. Yeah. But one of the things, I think I mentioned it before, I bought the UK's biggest and oldest pottery manufacturing company. It's called Hudson and Middleton's. It was in liquidation. It was going bust. 45 jobs were being lost. And me and a mate thought, we can get in on this. So we bought it out of administration, and it had the royal seal. It made all the pottery for all the palaces, and it was amazing. It was in Stoke. It was this huge factory with 8 massive kilns and stuff like this. And in hindsight, what the hell was I doing getting into freaking pottery? I know nothing about pottery. And so
I thought the idea was you didn't need to know about the business if you brought your business structures into it and they had a management team in already.
Correct. But there's always nuances in it. So me and a mate, we were both, similar business experience. We thought, okay, we'll get it out. We can save 25 jobs. We did all the numbers. On paper, it was the perfect plan. I put 50 grand in. He put 50 grand in. We thought, okay, that's enough sort of cash flow runway to get it going. But because we were both complete noobs in the pottery space, there were a few things that we didn't see. So, for example, the company that was in liquidation owed British Gas 330 grand. And unpaid gas bills, okay? Yeah. So that was why it was going bust. The directors had milked the company until it went bust, and then they did a runner. And so we came along, we set up a knuckle company, so we basically set up a brand new LTD, completely fresh. That LTD then bought as many of the assets out of liquidation for, for pennies, basically, buying the doormat, so to speak, buying, getting the business, getting, all the IP, etc. And we got all our ducks in a row, and we thought, okay, sweet, we're now ready. We've got the website, because part of it was that we're going to completely revamp the website and beast it on online or e-commerce, which we would have done. Yeah. And it had lots of natural traffic anyway. And then before we know it, British Gas went, no, we're not going to give you any gas. We're like, what? Yeah, you owe us 330 grand. No. You owe the other company. The other company owes you 330 grand. We're a brand new company that's just sort of helping, try and save some jobs. Can we have some gas please in a new account? No, not until you pay us 330 grand. Yes, but we don't owe you 330 grand. And British Gas were like, well, I don't care. This company, this building owes us all of this money. And so we went round this merry-go-round for 6 months. And we lost 100 grand in cash flow in 6 months. And then because British Gas wouldn't turn the gas on. You can't run a pottery business without gas for the freaking kilns.
No, and most of the staff would have drifted away by then, wouldn't they, as well?
We bled it in. So we had to turn the website off because we couldn't take any orders because we couldn't make any pottery. We couldn't even buy other pottery from elsewhere to then sell it. And so game over. Now, had we been slightly more averse, clued up in the pottery space, we could have, there's loads of hindsight lessons there. We could have, made a deal or contacted British Gas before we bought in or all that sort of stuff. Yeah. But I guess being completely outside of the business does help, though. I've gone into business where I don't have a clue what's going on the front end, on the actual delivery end. In fact, I still got some businesses where I still don't really know. I've been part of it for 5 years, but it's good because I tend to only buy 35% of a company and let the existing director do the do whilst I work on the business.
You just add your systems in, don't you? I heard you speak about it before.
Yeah, so, sorry, iPhone is about to run out of battery. Stand by. I'm just emergency. See, this is another learning point. Prior preparation prevents piss poor performance and all of that. So I guess my first caveat is that if you've never been in business, don't bother with M&A. The first thing you need to do is set up your own business from scratch and try and run and grow and then sell that. You need to go through the whole business cycle. Set up, run, grow, sell, in that order.
Because I've obviously got, I work privately, so I've got, I don't perceive it as a business, but it obviously is in my head, where it runs. But basically I provide the service and there's very little else extra because it's medical, there's no VAT involved or stuff like that. So it's a pretty straightforward business model.
Okay.
But it doesn't feel like I've had experience being a business owner. Although I've had the company since 2010.
Yeah. So what would you be providing in this potential business?
Well, I do hip and knee replacements, so I get paid via the company, so it's more as a tax thing.
Okay. Well, then maybe that. I mean, obviously, there's caveats to everything. So, because this is in a field that you're very much experienced in already, you know all of the nuances and intricacies.
The business isn't. It's just come across my path. It's an agricultural business, a tree growing business, basically. But it's got a team that runs it, and then the original owners died, and it's run by their son who has no interest in running it. So it's kind of just pottering along and drifting.
I see. Okay, so let's just do a bit of role play here. Magic wand. You've done my Nora. Have you heard of my Nora technique?
Yeah.
Yeah. So let's.
I saw that 3 days ago.
Cool. Okay, so magic wand time. You've done the Nora. You've got an option in place to buy 35% of the company for £1, blah, 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 all that sort of stuff. It's now day one, okay? You sign the contracts late at night, you go to sleep, you wake up, and it's day one of the business. What are you going to do next? What's the first thing you're going to do?
The first thing I'd do would be to look at the e-commerce side of things, because that's it's like all older businesses. It's basically done from word of mouth sales rather than.
Yeah.
So that's where the value would come in, increasing sales through that.
Cool. And do you know how to create a new website, new funnels, and all that sort of stuff, and drive traffic?
Yeah, my wife can do all that stuff.
Oh, okay.
She's letting her do that. So.
Cool. And then, so the next question is, let's say another magic one. I'm fast forwarding time here. You and the new business owner and the team, you've mapped out a 100-day plan or a 90-day plan. Part of it obviously is getting all the online assets done up. Do you have will you have marketing spend to then generate all this traffic? And if so, how much ad spend?
The company actually has quite large cash reserves within it. So yeah, there's cash within the company. So it's just it's basically just running without any sort of helmsmanship.
Okay.
You know how sometimes they do.
Yeah. Yeah. Okay. Because I guess the point I'm trying to get to is that so in the military we have a saying that a plan never survives first contact. So and what I see are, I guess, similar situations where they you do everything right. You like in a checklist, you go through everything. It's now day one of the business. You've got this 90-day plan, but then the plan doesn't work just as you thought it would. Like, I've never seen a cash flow forecast spreadsheet work ever. And let's say you create a nice website, you start driving traffic to it, and then no leads coming through. And so I guess this is where hopefully your wife then has enough marketing experience to then work that problem.
Yeah.
If all of a sudden the leads aren't coming through, like, so for example, take the WAP for example. It costs me, or it has done for the last couple of years, between £100 to £200 to get a single WAP trialer. And a WAP trial is free. It's a 30-day free trial. Yet online ads, it's costing me £100 to £200 to get a trialer. Now, obviously,
what's your lifelong retention though of a Whopper?
Yeah, so far, or it's, I guess it's really in its current form only been running for about 2 years. So once we have a Whopper, they do stay with us, and luckily for us, we have a 50% conversion rate. So literally half of all the trialers that we do become a Whopper. So monetarily, it still makes sense that I can still make a profit and pay £100, £200 per lead, but I can work around marketing problems, and this is where you just really got to hope that your wife has the marketing sort of background and knowledge that if all of a sudden you turn the tap on and no leads come through, what's your secondary stop?
What's the next step?
Yeah, exactly. Because then all of a sudden you've spent all of this time, you've then spent all of this company's money on ad spend. And then this is where relationships break down, because the existing biz owner goes, wait a minute, I thought you were going to send 10xr income here.
You haven't delivered your expectations for them.
Yeah, so I guess so, and it's not just a marketing thing as well, because I've done things where I've jumped into a business, I've done exactly what I was going to do, and I've 10x the amount of leads coming in, but the learning point I got from that is that although I followed through in what I said I was going to do, the other business partner did not follow through in what he said he was going to do. So it was a situation where he was like, yeah, you send the leads, and I'll spool up the sales team or the inbound team, etc. And I can eat as many leads as you can give me, Siam. I was like, okay, game on. And I did it.
Wrong thing to say sometimes, isn't it?
Yeah. So I think I 5x'd the amount of leads, and all of a sudden I drowned the company in leads. So what happened is that this company, because the other director was not fulfilling the leads, it had the inverse effect that all of a sudden all of these trialers, whatever, started having bad opinions of the company. Oh, this company never replies to emails. They never respond to us. They never do this. And
the reputation was affected.
Exactly. And I'm like, dude, so I had to turn the tap off. And this is where relation to M&A, this is ridiculous. M&A is basically business marriage. I cannot stress that enough. And it's even messier than a divorce. Touch wood, I've never been divorced, but I know lots of divorced people. Basically, every military pilot above the age of 40 is pretty much divorced.
I've had two, so I know all about them.
Oh, there we go.
Doctors are in that category as well.
Oh wow. Mind you, I guess with all the long hours and stuff.
The most expensive financial investment ever I made.
I know. My mum always said, never have a divorce because you then have to buy more furniture. My mum's like this tiny little old Thai lady, and she has all these cool old wise sayings. But and
I always like the saying of walk up to a woman you don't like and buy her a house.
Yeah. So it's a tough one. Obviously, I can never give financial advice, but
I appreciate that. It's just because you see a lot of stuff about it, and I want to explore doing more business-based things. So it's of interest to me for that perspective. Yeah. But it's just obviously it's having the skill set, isn't it?
Yeah. What I would do, just as a bit of a split test. Let's say this company that you're eyeing up. You don't want to sour the relationship, etc. What you could probably do is say, look, I'm a bit busy at the moment with other stuff. Let's put in the diary to chat again in 6 or 9 months' time, where I'll have more mental bandwidth, etc. Now, what you're going to do? Yeah, but whilst you're putting that potential deal on hiatus, what you're then going to do is find another arborer, another tree surgeon company in another city, but smaller, and then practice on that, buying a smaller tree company in another city, using the Nora method, etc. And that way you can get some learning points out of the way. I mean, it could just be a one-man band. Let's say it's like a tree surgeon that knows nothing about online ads or whatever, and just do a deal. Like, hey, we're going to set up a company. You can have, 60%, I'll have 40%, I'll do the lead flow, and you just cut the trees. And then see how that goes. Now, this is then, you then get you've got leverage here, because then when you go to buy the other company that you're originally talking to, you can say, oh, actually, I now have this other company. Yeah. So what we're going to do is, you could do a roll-up and put both companies together. So, yeah.
Yeah, because I've seen that. Some businesses do that, don't they? They just bulk things together to create a larger functioning unit, don't they?
Yeah.
For growth, for more rapid growth, isn't it?
Yeah, you get better exit multiples when you do a roll-up, and also you actually it's more profitable. So it is. I think I said in the previous one, with M&A it's weird. 1 + 1 = 5, because if you've got like 3 companies each doing $100,000 profit a year, and you roll all 3 companies up into a topco, that topco now has a $300K profit, on paper. But you have you can streamline, so you get rid of some costs, because 3 companies don't need 3 accountants or 3 subscriptions to a CRM or whatever. So you can streamline, get rid of $50,000 of costs. So now you got $350,000 worth of profit, but because it's a bigger business, you've got a bigger exit multiple, and so you're now sat on more equity. But I think what we're gonna have to do. Does anyone have any urgent last minute questions? Because it looks like I'm incapable of keeping these to half an hour.
sorry for getting you going.
No, it's good. No, I hope people are learning nuggets during these daily things. But does anyone have any questions in Clubhouse or Facebook Live, or forever hold your peace and wait until Monday? No. Going last chance. Put your hand up. Okay, let's call it a day there. So yeah, it's been 45 minutes. This recording of the Facebook Live, etc., will be on my YouTube channel. Literally, just go to my YouTube channel, and there's a playlist called, let's have a look, Wealth Generation Social Chats. Literally, every recording is there. So dig in, and also, shameless plug, check out thewap.org. This is literally where it's like a Netflix for wealth gen. Oh, Matthew Lyon. Okay. You got in there just in time. How can I help, mate?
Can you hear me?
Yeah, how's it going?
Yeah, not bad. One thing just for you to maybe try this weekend. I was in a clubhouse chat earlier, and they, at the very start of this meeting, you said about gaining reach to more people. They all said it was to do with their bio. So maybe adjust your bio over the weekend and see if that has an impact come Monday.
What, as in, does changing the bio trigger a new sort of, like, does it...
No, apparently it's like keywords in the bio, things like that. It's nothing to do with meetings. It's all down to how you perceive yourself in your bio. So maybe something to try over the weekend.
Yeah. So it's a good point. So if you look at my bio right now, I'm not going to say the name, but there is a Clubhouse expert, so to speak, who said exactly the same thing. Like, you know, there's different ways you can game the Clubhouse, algorithm, etc., and also the bio. So what I did is I simply copied and pasted his bio, and then the format. So if you click on my bio right now, I've got some ticks, my vision, my mission, all that sort of stuff. I literally just changed the words, so it's the same format as his. So if this person is correct, I think, or surely I've So,
okay.
and
cool.
And that's the thing. When people do things at work, just emulate. So, hopefully this bio format is works. If not, I don't know. But
just that's fine. I think from what I've heard from other networking groups around Clubhouse, it's also about you participating in other rooms.
Correct. Yeah.
And what you'll get from that is some people obviously following there. So I think there's some group setups you can literally sit yourself in there on mute and people will follow you back, which is a bit misleading. But I don't know what other rooms you're taking part in. But it could be that you need to get yourself in some bigger rooms and see what followers get involved in you that way as well.
Yeah. The algo is all about being one of the panelists or the moderators in a group with like 10 to 20 other speakers as well. Because then you get rooms of like several hundred people, and then you naturally get more followers that way. But rightio, let's call it a day there. It's 47 minutes. I'm gonna have to love you and leave you, folks, and I will see you all on Monday. Again, Monday 1600. Have a good weekend, or
thanks, Siam.
Toodles. Bye.